this programme. In the meantime, let's take you to the financial markets and see how things are faring now following the fluctuations that global markets experienced on Monday and Tuesday. So as you can see, Japan's market just closing up by 0.5%. Hong Kong also 0.7% up. And the Dow below it there, the close in the United States. It was a really volatile session on Tuesday on Wall Street. The Dow at one point down another 500 points, but as you can see, bouncing back before the end of the day. So is this a correction or was it a mini financial crisis? Cornelia Meyer is CEO of business consultancy MRL Corporation. So, Cornelia, what was your take on this week for the global financial markets?
Well, my take was A, volatility is back. B, it was a correction, was a long overdue correction. And C, it was an indication, that we are off the drug of low interest rates and forever expansionary monetary policies, because both the ECB and the Fed are tightening their balance sheets, and the Fed is hiking rates, and it may, with the latest the latest wage figures, it may even hike it more than 3 times this year, which is what spooked people.
Do you think we're going to have a bit of a volatile period of time, though, now for a while? I mean, today we're just seeing Japan up at 0.5% at the end of the day. Yesterday it closed down 4.7%. Is it a speculator's paradise at the moment, and it's a question of those who just hanging in there for the long term, riding it out?
Yeah, I think we're going to see a little bit more volatility. A shock like that, it's like an earthquake. Like you have the earthquake and then you have the after tremors. And markets are a little bit like that. And so people will need to figure out in their minds what has really happened. And we will see a little bit more volatility, and we will need to get used to this new normal, because the old normal was extraordinary.
I mean, many said, sort of certainly on Wall Street, when it went down a sort of 500 points at the beginning of the day or during the beginning part of the session, there were bargains to be had, and that was it. People were coming in at the bottom to grab those bargains, because many of these share prices, some companies have had a stellar run for 12 months. So it was an opportunity to not to be missed for many.
It was an opportunity, but by no ways were these cheap valuations, because if you look at it where the stock market was 12 months ago, we're still much higher. So yes, they were a little bit more affordable, but they were by no means cheap.
Cornelia will be back. Thank you for now. She is going to talk some more about that story and